Clarity is now critical, and Trump is planning a meeting with senators. We'll break it all down for you. Maybe there is hope yet as we get into it. I want to thank our sponsor, and that is OKX, where you guys can do some interesting things while the market is very volatile, and that includes getting up to 4.1% APY by holding USDG over on OKX. You can also hold RLUSD as well. So stablecoins, you can get to work over there, guys. And guess what? There's no subscriptions, you're not paying a monthly fee, and there's no lockup. So you can get in and out anytime you like. And while you're at it, go in and get some of the best trading fees out there. So, of course, use our link down below. You guys get a little bit of a bonus to get started over on OKX. Let's go over to a few tweets I want to kind of lead off with, and that is that Trump is going to be meeting with U.S. senators today to discuss crypto and the market structure bill. And I think the point right now will be this, is you've got some very interesting issues that are facing President Trump and also the administration in terms of clarity. How they negotiate this, and we'll see, they may push it down the road and say it doesn't really belong in this, but I think this is going to be the meeting that will pretty much tell the tale of whether or not clarity gets through. Ripple may see that to be the case, because guess what? They've put the clarity truck back on the road today. It's in D.C. trying to get senators to make some decisions and pay attention to what's happening. Other points you have to look at within the bill, these are the three key things. If you guys have been following our show, you probably know, but we have a lot of new viewers. Thank you for subscribing. We appreciate that. But these are the three boiling points that really it comes down to. One is the ethics provision. The question is whether or not they negotiate some sort of compromise and they push this down the road. The key things are going to be developer protection, which I think is going to still stay with it, and then, of course, the stablecoin yield. That is the fight, I think, that continues to be the number one issue that the banks, of course, push in on. One other point that is important here is in reference to who's going to be in the room. It goes back to this right here, and that is Ruben Gallego, who is the Democrat who led the ethics talks for months. He's not invited. That is a problem, I think, for one, the Democrats to maybe come to a détente with this administration around ethics. And I think it also showcases that maybe we've got a handful of Democrats that are going to push us in the position where we cannot make the 60 votes. So right now, there's about 53 Republicans, so there needs to be 7 Democrats at least, and that is without Lindsey Graham even coming into the play. So big pressure right now when it comes down to voting. I want to play a quick clip here of where some of the industry thinks this is going to land on ethics. Take a look.
Now, I know there's an effort in the Senate by a number of Democrats to add ethics provisions. That's something we in the industry really can't speak to. It's an amendment to the government ethics rules, which is really something policymakers need to figure out. And so we'll see what happens on that side of it. But even without an ethics provision, the bill is a dramatic step forward for the priorities that Democrats have laid out. And so I hope everybody keeps their focus on that reality.
Absolutely.
All right, guys, let me know what you guys think. Do you think that the ethics issue will put a stop to this bill? Just put yes or no down below. I'm kind of curious, because what Fayer was getting at here is that it really shouldn't be even considered in this particular bill. It should be something that is a broader scope in general. And maybe that is the angle in which the lobbyists and maybe some of the lawmakers are trying to go. So I don't know, we're going to see it. But you got Senator Tom Tillis. He's one of the lead negotiators right now behind the banks and crypto stablecoin yield compromise. He told Brendan Peterson that he's got this whole thing around a circuit breaker language. And what he said was adding the language would be a test for the banks. If they still oppose it with the bill with a circuit breaker provision, then he suggested their concerns about, deposit flight is just pretty much BS. Let's just say it is BS. And I think that is the issue right now. This is more about control of what eventually will be an emerging generation of new investors and a lot of new financial decisions that are going to be made out there. And I think banks are kind of on the line either way, because there's been so much innovation in the fintech side of things. Another thing to look at right here, and I think Fayer hits it right here, is the impact on stablecoins on small banks has received a lot of attention, but not for the right reasons. He goes on in this tweet, says, now the part small banks should actually care about Stablecoins enable 4,000 community and regional banks to punch above their weight. This is what I actually think that the big banks are concerned about, is that the little banks might actually have a chance here to grow. So I don't know, this is going to be, maybe there's a fight brewing right now within the banking industry as a whole, and this is just one of the cornerstones that would help drive it forward. If you look at the odds of clarity, it has been dropping really since we saw right there around May 10th. I think it was the Mother's Day weekend or so. They went after the senators, and I'm talking about the banks, the ABA, and that's essentially the situation of the lobbying group putting a lot of pressure on. Since that occurred, we have seen kind of up and down, but the trend line is not good, even holding at about a 40% chance right now. So let me go to another clip here, because this is Lummis grilling Warsh on issues on the destruction of records during the Silicon Valley Bank. Now, this could ties into some of what maybe the banking industry is concerned about. Take a look.
You know, there are rumors that there may have been destruction of records by some of the staff at the Division of Bank Supervision, and of course that's a crime. So if records relating to the supervision of these banks were intentionally deleted by staff before you were at the Fed, before you ever became chairman, will you order your staff to assist in recovery of these records and cooperate with law enforcement?
Yeah, so I made a bold statement to one of your colleagues before that I was opposed to scams. I can make a bold statement I'm opposed to criminal activity. I have no reason to believe there's any criminal activity here. But I think we want to get to the bottom of an investigation. If there's an ongoing investigation and investigators generally want access to things, there's no reason why they shouldn't have access.
Thank you.
All right, so they're giving access. We'll see if that pans out here, because it could put some pressure on the Fed itself. Lummis is also pushing, obviously, on clarity. She is the one senator, I think, that continues to kind of tout the horn for obvious reasons, but let me play a clip on that. Take a look.
It's very important that we get this bill across the finish line before the August recess begins, so we can make the markets aware of the stability that will be provided to them if they remain onshore in the United States to do business. This is a pivotal time for the industry, and we want to meet their needs.
Is it fair to say this bill will be on the Senate floor the week of July 20th?
Well, I expect it'll be that week.
Then you have Patrick Witt right here. The world won't wait on America forever. We can either lead or we can just fall behind, pretty much, when it comes to digital assets. The problem is this, guys. We did a video yesterday. This video is pumping right now, and it's Japan. And the reason that they just blew past the U.S., and here is the core. They have essentially, from the government level, paved the way, both on the banking infrastructure, the adoption model, as well as the distribution model that it would take to implement crypto across the entire economy inside Japan. Remember, Japan, one of the largest trading partners with the U.S., but more importantly, one of the top 5 when it comes to economic powerhouses globally. So this is a huge move on Japan's side that is really positioning them, because they understand there is a very interesting situation boiling when it comes to things like the reverse carry trade, which we've talked many times. If you guys know what that is, go out and do a little research on it. It essentially starts to put a lot of pressure on U.S. Treasuries. And if they have an alternative system that essentially is underway, this is exactly what Patrick Witt and a lot of lawmakers are concerned with right now, is that the U.S. no longer becomes the center of the financial ecosystem. Japan's $250 billion SBI group now is partnering with ONDO. This is another nail in that coffin as they continue to push through. This is going to bring Japanese stocks on chain, including tokenized assets through SBI. So that's more distribution. You've got the yen stablecoin, JPYC. All of this will be used for payments and collateral. This clears the table for what Japan is really trying to do, and that is make a massive step forward. And I think their tax positioning, when they reduce their capital gains from 50 to 20, I mean, can you imagine seeing your capital gains tax going from 50% on crypto to 20%, this is going to ignite activity. And I think that might be why we're seeing a little bit of movement in the market right now. So as you can see, guys, for the amount of updates that the Japanese are doing right now, and the speed in which they're aligning this, it's possible we could see all sorts of announcements that would continue on. 20 days could be a lifetime based on everything that is happening, because I think there is a slew of companies here in the United States that are simply waiting for the Senate to say yes. The minute they do, you are going to see an absolute explosion of announcements, press releases, movements, strategic partnerships, a lot of these NDAs completely uncovered, and a whole movement, I think, in crypto going forward. We're ready. The trigger is there and ready to pull. I think the problem is that we've got Capitol Hill holding all of this up right now. That's what it boils down to. I want to go to a clip here, though. Let's jump over to how crypto and AI are connected at the hip and what it might mean going forward. This is Tom Lee.
There may be a point in time where if our delegated agents make more money than us, we're going to wonder if we work for them or they work for us. And I think that crypto is really one of the ways for humans to control the future role of agents. Right, market was looking for 2 cuts, now it's 2 hikes. That's a headwind. The Clarity Act, which was supposed to help provide and create federal preemption of cryptocurrency rules and let the CFTC essentially have purview over that industry, that's still stuck in the Congress processes. And AI, of course, has done so well. To me, headwinds, but they're not creating what I call intermodal replacements. I think blockchain is still going to be central to the future of the financial services industry and actually to how we manage AI.
All right, so some very key statements there. One, the fact that he mentioned clarity just shows you that he's fully in tune with why this is so important. He also understands the implementation of how AI agents are going to be transacting on our behalf in the future. And it's coming, guys, very quickly. And I think we're going to probably see it integrated more and more into the centralized exchange products that are out there. Robinhood's already gone this direction. A handful of others are moving this direction. It won't be very long. I think by end of year, you're going to see really active portfolios by average people, average traders that are doing some pretty amazing things. Visa actually said that AI agents will use stablecoin payments for tiny payments. So now we're talking about micro payments that would get involved into this. And I think that opens things up. Stablecoins would be a part of that. That's a multi-trillion-dollar industry in itself globally. So imagine all of that still coming on blockchain, and we haven't even moved the multi-trillion in terms of asset, liquidity into risk assets overall, which continues to put more pressure on the overall market in general. Stripe and PayPal, though, are still courting a deal. This deal could put PYUSD, if you guys don't know, that is PayPal's stablecoin. Yeah, they have one. And this would put it into basically Venmo's 400 million users blockchain payment rails. So you'd have Venmo, PayPal, and Stripe all connected. If the government doesn't shut this down, from an antitrust standpoint, I think this would be interesting. The other side to this is this pivots PayPal out of a public company because Stripe obviously not public yet. PayPal surged on the news. This, of course, will be a question mark, but does this do something for PYUSD and maybe even the strategy that Stripe could be putting together? Again, this is all still speculation because this would have to go through a lot of regulation to just get done for sure. Micron, though, in the meantime, has continued to retrace. Now, Micron has been one of the winners overall when it comes to the semiconductor stocks. And the reason obvious, they make the chips and memory that goes in almost every device out there that you're utilizing today. That, of course, has blown off top. We've started to see a pull down. Micron is down now 30% since just June 22nd, guys. So less than a month, we have seen a 30% drop. So this probably hurt some retail traders that were trying to look at where this was heading. The semiconductor stocks are the new leaders in the market, though, still, and I think everybody's trying to figure that out. But Micron at the time contributed 1.4 percentage points to the S&P's 500. That was after their gains. This, of course, was during the stock which had rallied over a long period of time. Are we seeing a rotation is really what the question is. If there is a rotation out of this, whether it's going into capital like stablecoins or into just cash in general, and ready for either a final dip or possibly what leg up we are on right now as Ethereum hits almost $2,000. So maybe there is some strategy going on right now from the semiconductor traders that are starting to shift into more risk. Here is Mark Cudmore talking about the AI turning point. Take a look.
I think the bubble keeps on inflating until an earnings season changes, and what I'm looking for an earnings season is a slash in capex. So I think it is a tremendous AI capex bubble. I think it's going to be very painful when it happens, but I don't think you can preempt it. And I think I think, you know, is this a turning point now? I don't think so. Yeah. But like, I'm open-minded, but like, basically, I think you've got to stay underlyingly positive until we get that capex reduction. However, as we discussed, since May, I think we're in the much more volatile stage. And I think the volatility we've seen in the last 2 months is what we're going to get for the next 2 months. But like the prior bubbles, that volatile stage lasts about 6 months. So to me, you know, my base case is we're another earnings season away always, but I'm going to be open-minded to every single hyperscaler earnings report. As soon as capex gets slashed, that's game over.
All right, so this is something that is critical to pay attention to, guys, because you're looking at two colliding forces here. One, CapEx potentially going to the line of let's reduce spending. When that does, just like Cudmore just said, it's game over. That means rotation of capital. Only one caveat. If clarity doesn't spin through Washington, then you have basically a mismatch of where that liquidity could go. Instead of into crypto, because it's got, you know, a regulatory pathway now, you could be running into something else. So this is a very sensitive time right now in the markets. So pay attention to that. Larry Fink, though, thinks there's something else happening. Listen to what he had to say.
I was always worried about the leverage in Bitcoin and crypto. There was too much leveraged players in it. That's why we had the washout, and I think there's more stability at these levels here. But for the scale of the capital markets today, the leverage is not as large. I mean, that doesn't mean there's not pockets. But no, I, as I said in my prepared remarks this morning, I'm very bullish on the markets over the next 12 months.
All right, so Fink's point there is, I think it's well taken in the sense that most of the leverage, the extreme leverage has been flushed out. That's the move we've seen from 125 to down to where we are 65 now in terms of Bitcoin. But I think also what he's going to is that it's getting more stable, which means that Wall Street's getting a little bit more comfortable with the play on crypto in general. Bitcoin, of course, leading the charge there. But this will also flow over into ETH and a handful of other blue chips. So the fact that he is very bullish, you've got Tom Lee still very bullish. You've got the market kind of looking for an opportunity of a rotation, but yet you've got a holdup over here with clarity. Do you see the mismatch here, guys? Because this is what we're dealing with right now. So stay tuned. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.